Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Thursday, August 12, 2010. Let's start today's broadcast by taking a look at our key fundamental releases from overnight and in the US. First up, we had industrial production data, which showed an unexpected decline in June, which was led by a sharp drop in durable consumer goods such as furniture and home appliances. Output fell 0.1% when expectations had production climbing 0.7%. As we can see, durable consumer goods made up 0.9% of that decline. Europe's economic growth may slow as governments reduce spending to tackle bloated budget deficits, and the global recovery shows signs of losing momentum, so overall this was a pretty weak report for the Eurozone. In the US, we had initial jobless claims for the week of August 7th, which came in at 484,000, which was far above expectations of around 465,000, and is the highest level since February. The 4-week moving average was also up a steep 14.2 thousand to 473,000, and it's the red line on the chart that we have to the right. This, the 4-week moving average was the highest since February. In a partial offset to that negative data, we did have continuing claims fall by 118,000 for the data for the week ending July 31st. Now, taking a look at the chart, we see a stagnation in the labor market following a sharp drop in claims throughout most of 2009. But in 2010, we have been moving sideways in terms of claims, stuck between the 450,000 and around the 500,000 levels. Now, most recently, though, we have been trending higher. So if that leads to further stagnation and even contraction in private hiring, this could be a precursor to a double-dip recession in the US. Now let's switch our focus to movements in the currency markets. Here we're looking at the euro-dollar pair, and as we see, following a very volatile action in yesterday's session, where the euro took a big brunt of the sell-off in risk in terms of currency markets due to the plunge in global equities, which happened on the back of the market's worries over global growth. Today we continue to see some sharp swings, but relative to yesterday, definitely not as dramatic. The euro rallied in the Asian session, hitting a high of 1.2930 for the day, but then following its industrial production data, as well as data showing that Greek second quarter GDP contracted 1.5%, the euro-dollar pair pushed below 1.28 area briefly, and now in New York trading, we're seeing the euro climbing back up somewhat as U.S. equities pare some of their opening losses following the weaker than expected jobless claims report. Overall, though, we remain to see the euro pressured this week as we have kept the sharp drop we had seen yesterday. Taking a look at the euro-yen pair, we also see some high volatility, as in the Asian session we rallied from the 109.20 area up around 160 pips, proceeded to decline the same amount, and then in the New York morning trading, rally almost back to where we were at our highs today. In other words, we are seeing a very strong battle right now between the pairs, bulls and bears, as well as fast pricing in of the different fundamental news as it comes in. It's clear, though, that this 109.20 area is now a very important level of support following today's double bottom action. Here we're looking at the Euro-Swiss Franc pair, and with concerns about Eurozone growth again in the headlines, we saw the Euro-Swiss Franc pair move very sharply today following its very sharp decline in yesterday's session. The growing concern here is that European nations also may struggle to finance their debt, which boosted demand for the currency for the Swiss franc as a safe haven. The catalyst there was Ireland's borrowing costs rose at an auction of 6 and 8 month bills today, and the report, as well as the report that showed Greece's economy contracting for a 7th quarter. So we definitely see the euro on the back foot against one of its European safe haven rivals, the Swiss franc pair. To talk a little bit more about the yen, let's take a look at the US dollar Japanese yen pair, and we see similar swings back and forth, first in Asian trading, then the European session, and now in the New York session. The yen started to weaken overnight as the Japanese Prime Minister called the recent rise of the yen against the greenback rough, and that was followed up by the Finance Minister saying that he would consider appropriate action on the yen, which steps up the tone of official concern over the currency's recent rise. The Finance Minister does have the authority to tell the Bank of Japan to intervene in currency markets, but so far we have seen the greenback rallying. We do remain within the trading range we had established during the last two sessions, and currently we rise back above the 85 level and from our 15-year low that we had seen briefly in yesterday's session. If we turn to another yen pair, the Australian dollar Japanese yen, which is a carry trade pair, we see that following yesterday's very sharp slide, we have stabilized somewhat in today's session, though we did have rather sharp swings back and forth, as we have seen with most of our yen pair. While we did see equities around the world dip, was not in the same way that had categorized the very sharp drop we had seen on Wednesday. Taking a look at another currency closely tied to global growth, here we look at the US dollar Canadian dollar pair, and we see that we traded in a rather narrow range during most of the overnight trading session, and so the pair consolidated the gains that we had seen in the greenback from yesterday's session, and we have been rallying in favor of the greenback over the past 4 or 5 sessions, following a move in favor of the Canadian dollar throughout late July and early August. However, at around noon New York time, we did see the pair begin to probe its lows for the day from overnight, and we pushed down to the 1.0426 area, as we did have US equities pairing some of their sharper opening losses. So it seems that perhaps traders may want to retrace part of the large swing in favor of the greenback we have seen in this pair over the past 4 sessions, but again, a lot of that rides on investor risk sentiment, which while stabilizing today still remains uncertain. We have one more trading day this week, and there's a good amount of data to take a look at, which could help solidify in traders' minds which direction the market should take. Tonight we have retail sales data from New Zealand, but the main focus overnight will be preliminary second quarter GDP data, both from Germany and the Eurozone as a whole. Expectations are for Germany to grow 1.3% and the Eurozone to increase growth by 0.7%. If the actual figures come in weaker than expected, that could cause further selling of the euro. If they hit the targets, there's still the fact that growth has likely peaked in the Eurozone, as countries will be enacting austerity measures during the third and fourth quarter, which will cut into the growth figures. In tomorrow's session, the main focus will be on U.S. retail sales data, as it will give traders an indication of how consumer spending is faring in the U.S. After a 0.5% decline in June, July is expected to show a 0.5% increase. If this figure comes in under the forecast, that will hurt risk sentiment and either 1. Pressure the dollar, as it means more loose monetary policy from the Fed, or 2. Set off wider fears about global growth, which could actually boost the greenback and yen on risk aversion. Also on tap tomorrow will be U.S. consumer inflation data, as well as the preliminary reading on U.S. consumer sentiment from the University of Michigan survey. And that's it for today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.